Hello learners, hi, how are you all? You might have seen me in the previous video discussing the entire concept of goods sent on return or approval basis or goods sold on return or approval basis. So in this video, we are going to solve problems on all the cases and all the variants and all the types in the case of goods being sent on return or approval basis. So before we get started with problem discussion, I have an important announcement for you all. This is regarding the new batch for CA Foundation, May 2023. This is from the team of Yashas Academy on the platform of Unacademy. The name of the batch is Step Up with Yashas. This is an exclusive English comprehensive batch for CA Foundation on the Unacademy platform. You get to learn from the team of Yashas Academy. The batch is already started on 10th of November. The features of the batch are it's going to be live interactive class, revision and practice notes will be made available to you. The structured notes and PDF in the colorful manner will be made definitely available to you. And the unlimited access will be given to recorded classes of the lectures if you miss the live lecture, and you get to be part of live tests and quizzes. In the batch, you get to learn accounting, principles and practice of accounting from me, CA Rajavardhan. Your mathematics, statistics and logical reasoning will be handled by Anil Mishra sir. And you're gonna learn law from Nitika Bachawat ma'am, economics and BCK from Shandar Ahmad sir, and BCR from Pooja Chapani ma'am. And the batch schedule is going to be this way. The classes are going to be in the evening. It starts at 3 p.m. and it will go until 5:30 p.m. That will be our first session with an half an hour break from 5:30 to 6. We'll have a second session from 6 o'clock to 8:30 p.m. And starting on November 10th is mathematics, statistics and logical reasoning from Anil sir. And you'll have law starting on November 21st and economics from November 29th. I'll be starting your accounting portion from 7th of December. We'll be very eagerly waiting to see you all in the batch and then help you all clear the CA foundation examination and then push you into CA intermediate. What are you waiting for? Take up subscription for this batch because a plus batch on Unacademy gives you great features like interactive live classes. As I mentioned to you before, structured course PDF, live tests and quizzes will be there. A new feature is something called Open House, like the Clubhouse app that you use. You can talk and interact with fellow learners as well as the educator on Open House sessions that we conduct on monthly basis. The digital notes is downloadable right after the session. An academy community is where you interact with all your fellow learners and you also get unlimited access to all of these features throughout your subscription term. You can also choose to take iconic subscription which will give you one-to-one live mentorship, study material in the printed form at your doorstep and also doubt solving at ease. The pay that you need to do to take up this subscription is 1063 per month for 24-month subscription, 1215 per month for 18-month subscription, and 1567 per month for a 12-month subscription. You can get your iconic subscription by paying 1829 for 24-month subscription, 2139 for 10 months, 18-month subscription, and 2625 for a 12-month subscription. And you can use the code YESHAS, which is YESHAS, to avail 10% off on the prices that you just saw on the screen. So what are you waiting for? Take up subscription and see you all in this journey of CA Foundation with us, the team of Wishes on the Unacademy platform. In the previous video, you might have seen me discussing the entire conceptual understanding of goods sold on return or approval basis or goods sent on return or approval basis. This is continuation of the previous video. So if you have not seen the previous video, please pause this video right now. Go back to the previous video. It's about 40 minutes, 35-40 minutes. You can quickly wrap up that video and understand the concept and then come back here. So you'll save a lot of time solving problems. So we are now going to start with question number 1 from our material. So question number 1 is a question wherein Amit runs an online store wherein goods are casually sold on approval basis. Casually. So remember case 1. Casually, when the goods are sent on return or approval, we record it in the normal sales book and then we record it as normal sales entry and close it. Yeah. So on 10th of February, sale on approval basis is 1,20,000 worth of goods at cost and the price is 25% on cost. So if it is 25% on cost, let's do some basic math here. Come on. Can I say that the cost is 100 and because the profit is 25% on cost? Can I say our profit is 25 and selling price is 125? I hope you wouldn't disagree with these numbers. And the goods are sent is 1,20,000 at cost. So in the cost column, if I write 1,20,000, can you help me find out what is the selling price? Pretty easy. ಇಷ್ಟಕ್ಕೆ ಇಷ್ಟಾದ್ರೆ ಇಷ್ಟಕ್ಕೆ ಎಷ್ಟು? If it is 100 for 125, then how much for 1,20,000? A pretty simple comparison. इतने में इतना तो इतने में कितना? ಇಂತಕಿ ಇಂತೈತೆ ಇಂತಕಿ ಎಂತ ಇವಳಕ್ಕೆ ಇವಳೋನ ಇವಳಕ್ಕೆ எவ்வளோ ஈத்துக்கு ஈத்தாண்டா ஈத்துக்கு ஈத்து அக்கா கிட்ல ஜலர்த்த அக்கா கிட்லே கம் ஆன் சொல்லுங்கப்பா how much would you get 1,20,000 into 125 divided by 100 that is 1,50,000. 1,50,000 is the selling price of goods set, for which we would have to write the sales entry on what date? 10th of February. So in the books of Amit, on the 10th of February, I would write a simple sale entry, debtors account debit to sales. We can in fact write it as trade receivables debit to sales as well. Being goods sent on return or approval basis, recorded as sale when it is sent, because Mr. Amit is optimistic. Okay, the amount is 1,50,000, 1,50,000. Working note number 1. Working note number 1 has the information as to reason why it is so. Then on 20th of February, goods are returned by customers to the extent of 80,000. When the goods are returned by customer, it is no more a sale. It is no longer a sale. So our optimism has just met some realistic approach. So the previous sales entry, whatever we had returned, should now be reversed. For which I will write the entry on 20th of February as sales account debit to debtors account. This is to the extent of 80,000. I have reversed the sales entry that I had previously passed because the sales are returned here. Goods are returned. On 15th of March, goods for which approval was given by the customer to the extent of 40. The customer has told yes to the extent of 40, for which we don't have to pass any separate entry, because you already recorded the sales entry when the goods were sent. Now when the acceptance is received, there is no need to pass a separate entry. Received approval or acceptance, so there is no need of any entry. So we have sent 1,50,000 worth goods, selling price being 1,50,000. 80,000 is returned, 40,000 is accepted. 80 plus 40 together makes 1,20,000. The balance of the goods which have been neither accepted nor returned awaiting approval is 30,000. You get that? So all the above goods are sold ordinarily in the course of online business. Considering that he closes his books of accounts on 31st of March 2020, you are required to pass entries. We will do it. So additionally, it has been provided that on 15th April 2020, this is next year, the customers have rejected the goods for which approval was pending. So the time period has not lapsed for these goods. When the goods have been sent on return or approval basis, we have transferred the possession but not the ownership. Because we have the ownership and the possession of the goods is transferred, the sales entry that was passed previously should now be reversed. And though the possession is with the other party, the ownership is with us. As on the year end, when we count our inventory physically, we might not have included it, but we should now pass an adjustment entry to include such stock lying with the recipient into our stock. So on the year end, for the goods sent on return or approval basis, neither accepted nor returned, we have to pass two entries. Number 1, reversal of the sale entry. Number 2, recording the stock entry. Come on, let's pass. On 31st of March, reversal of sales. Entry is sales to debtors. How much? This is for 30,000. This is being goods neither accepted nor returned lying with the customer previously recorded as sale now returned. And on the same date, 31st of March 2020, we are going to bring those stock into our books, for which I need to write the entry stock with customer account debit to trading account. For this, the amount is not 30,000. The reason is this 30,000 here is selling price. At 30,000 selling price, we reverse the sales entry, but when we try to record it into our stock, we need to do it at cost price. How do we do it? Come back to this working. The balance of the goods at selling price is 30,000. How much of its cost is? Simple. Again, do the same old cross multiplication. We will get it. 30,000 into 100 divided by 125 will give you the answer as 24,000. This is the cost of the goods which were sent on return or approval basis, neither accepted nor returned, and the time to return has not lapsed. Let's include this 24,000 into our stock by writing stock with customer to trading account. Ta-da! For which the entry is stock with customer to trading, being unsold inventory lying with customer brought into stock. And come to the important part of the last part of the question. On 15th of April, customer has rejected the goods. When the customer rejects the goods on 15th of April and he returns the goods to us, we don't have to write a separate entry. Why? On this date, we've already reversed the sales entry even before he reverses, gives the goods back to us. So on 15th of April 2020, there is need of no entry. Anil Kapoor, Bipasha, Basu, Salman Khan, and Lara Dutta. We don't have to pass any separate entry because the goods have been returned back to us. If in case the goods were accepted, then we would have written a fresh sales entry. And this, my friends, is the solution to question number 1. All of these questions have been already made accessible to you in your respective Excel sheets. You can just open the sheet and you can have access to all the questions. If in case you don't have the access to it or you want a link for it, you can always text me and I'll definitely share it with you. Great. Let's now quickly, very slowly get into question number 2. Question number 2 is Mr. Kumar. Mr. Kumar sells goods on return or approval basis casually. Again, whenever you say casually, we would record it as a normal or ordinary sale transaction. He has sold goods worth 1,50,000. Sold at a profit of 33 1/3% on sale. 33 1/3% on sale is 33.33% on sale, which has been awaiting approval from customers as on the date of closing books. So we are now going to write only closing entry. We are not going to write the sales entry. After the expiry of the period, customers have accepted goods equivalent to 75% of the goods and the rest considered to be rejected. You are required to show necessary journal entry. Let's do it in the books of Mr. Kumar. Let's quickly do some math now. Tell me how much is the cost, profit and selling price. Profit is 33.33. This time selling price is 100 because profit as a percentage is given on selling price and the cost would become 66.67 being 100 minus 33.33. In this case, goods sent is 1,50,000 worth, meaning 1,50,000 is the selling price. Am I right? Yes, 1,50,000 is the selling price. Can we find how much is the cost? Very simple. 1,50,000 into 66.67 divided by 100 and you will get it. Or you can also do that 1/3 on sale, 1/2 on cost basis also. It would work. Yeah. So here I am getting 1 lakh. So how do you get 1 lakh? It is 1,50,000 into 100 divided by 133.33. 1 lakh is the cost of goods which were lying with the recipient, which are neither accepted nor returned, and the time to return is still not lapsed. So first reversal of the sales entry that we're going to pass is sales account debit to debtors account. This would be at selling price of 1,50,000. However, the second entry that we pass to include the stock into our inventory, that is stock with customer to trading account, that is to include the stock into our inventory, will be at cost price of 1 lakh. You get that? And 75% of these goods have been accepted in the later period, post end. So when it is accepted later, then we would write the entry for sales, debtors to sales. But this would be for 75% of the stock. That is 1,50,000 to 75%, 1,12,500 being goods sold. Because we have reversed the earlier sales entry, we have to write the fresh sale entry. If in case you are not understanding these entries, my humble request, please do go back and watch the previous video. It's about 35-40 minutes. If you watch it at 2x speed, it would get over in less than 20 minutes. And trust me, it is a very free-flowing, amazing animated video. There's a lot of content flowing freely. Entries are really nice. There's a lot of Bollywood in it. And there's a lot of exciting things in it. You would understand the concept like never before. 20 minutes. It's definitely a good deal. Please do go back and watch it. Yeah, if in case you don't understand this. If you're understanding the entries, absolutely fine. You can continue. Yeah, so this is the reversal of the sale entry. And I don't have to write the entry for the balance 25%. 75% of the goods have been accepted. Rest is considered to be rejected. For such rest of 25% stock which is rejected, I don't have to write any separate entry. Because already we've reversed the sales entry. When they give the goods back to us, what we already did in accounts is happening in real. So there is no requirement of an entry for goods rejected and returned. And this is the end of our question on Mr. Kumar's transactions. Yep. This is the end. Quick vision, quick visibility of the entire solution if you want to. And here is our working note. Now we'll get into question number 3. Illustration number 3. This is in the books of S Limited. Let's start reading. S Limited sends out its goods to dealers on sale or return basis. That's pretty much expected. All such transactions are however treated as actual sales. Very optimistic. Are passed through day book. Definitely. That's the place where you pass now. You can't pass through Indranagar 100 feet road now. Just before the end of the accounting year, 31st of March 2016. As expected, 200 such goods have been sent to a dealer at 250 rupees each. Cost is 200. Let us now write this sale entry. You get that? Just before the end of the year, they've sent how many? 200 cases. Selling price 250, cost 200. Ignore the cost of 200 for time being. Multiply 200 with 250 and write it as sales. I will write the entry as debtors account debit to sales. This is in the books of S Limited. Debtors account debit to sales account. 200 units into 250 per unit, which is 50,000 each. Being goods sent on return or approval basis, optimistically recorded as sale when the goods are sent. Then what do we have? Of these goods, on 31st of March 2016, 50 were returned. 50 are returned and 70 were sold, while the other goods, the date of return has not yet expired. So 70 which are sold, for this we've already written the sales entry. We don't have to write a separate sale entry. For 50 which are returned, let us quickly reverse our sales entry. Sales to debtors. Shall we? This is happening on 31st of March 2016. This also around the same date. How many boxes? 50 boxes being returned. 50 boxes or 50 units into 250 per unit. That would come to 12,500. For the 70 boxes which are accepted, we will not write any entry. For units accepted, no entry. Why? It is already recorded as sales in the first place. Then what's happening? So 50 plus 70. 50 returned, 70 accepted. 120 over. But what we had sent is 200. So date of return not yet expired for the remaining goods is 200 minus 50 minus 70. That is 80 units. So, as on 31st of March 2016, there are 80 units lying with our customer for which he has neither accepted nor has he returned and the time to return has not lapsed. So, for this, we need to reverse the sales entry that we have already passed and we should also pass the entry to include such inventory into our stock, which is stock with customer to trading. The difference here being when you reverse the sales entry, you would have to do it at selling price, and when you have to include the stock into our inventory, you would have to do it at cost price. Yeah, let me write sales account debit to debtors. This is the reversal of sales. I will write 80 units into 250 per unit. How did we get 80? 200 sent, 50 returned, 70 accepted. 200 minus 50, 150. 150 minus 70, 80. So 80 into 250, 20,000, 20,000 is goods neither accepted nor returned, previously recorded as sales, now returned. And on the same date, let me include my inventory, stock with customer to trading. This should happen at cost. We remember the cost of the units is 200 per each, 200 per stock. I'll write 80 units into 200 per unit, that is 16,000, 16,000. This is the value at which I'll write this. If in case you are stuck at any point during the problem, you can always look into this working note which will help you. However, I taught you how to do it without. Units sent were 200, units returned were 50, units accepted are 70, and neither accepted nor returned will in this case be 80. You guys get that? Now, the cost is 200 per unit, selling price is 250 per unit. So profit is 50, which we actually don't need at any point of time. That's it. Is there any acceptance received at a later stage? They have not given any information about what will happen later. If they had given which, I would have definitely written some entry. Great. We are now done with illustration number 3. Let's go into illustration number 4. Cali Company. What is Cali Company doing? Cali Company sends out its gas containers to dealer on sale or return basis. Very good. All such transactions are, however, treated as actual sales and are passed through daybook. Okay, Mr. Cali, you are very optimistic. I will give it to you. Just before the end of the financial year, 100 gas containers, which cost them 900 each, have been sent to dealer on sale or return basis. We need to write entry for this sale transaction. Let us write 100 gas containers. Cost is 900. Let us identify what is the selling price. Debited to is accounted 1200 each. 1200 is the selling price. Shall we write the entry? In the books of Cali and Company, I will write the entry as debtors account debit to sales account being goods sent on return or approval 100 gas containers at rupees 1200 each 1,20,000. What's happening after this transaction? Out of this, only 20 gas containers are sold at 1500 each. Now remember, I actually don't have to write an entry for sales because I've recorded it as sales when I sent onwards. However, the sale is accepted, the goods are accepted at a price higher than the normal price. We sent it at 1200, they've accepted at 1500. You remember I had told you if it is accepted at same rate, no journal entry. If it is accepted at higher rate, we would have to write the journal entry for the differential amount. How much is the differential amount here? Previously we recorded the sales at 1200. Now we need to record it at 1500. So already 1200 is recorded. The differential or increase in the sale value of rupees 300 has to be now accounted. 300 per container into 100 containers has to be accounted. Let us do the same now. So I will write debtors account debit to sales account for 100 containers, sorry, for 20 containers which is accepted into 300 each. That is 1500 minus 200 is 6000. This is being goods accepted at higher price. So out of 120 are accepted. What is after that? Just before the end of the financial year, we read till then, you are required to pass the necessary adjustment. Only 20 are accepted. What about the balance? Balance are not accepted. Balance 80 containers, we would have to reverse the sales entry and also include them in stock. When we reverse the sales entry, we should do it at the selling price. When we include it in the stock, we should do it at cost price. When we reverse the sales entry at selling price, it should be the sale price of 1200 what should be revised and not 1500. Come on, let us write the entry as sales account debit to debtors to reverse it. 80 containers into 1200 each, that is 96,000 and 96,000. Then going a little further ahead, I'll include it in my inventory by writing stock with customer to trading account. This is to the extent of 80 containers into 900 per container is our cost. I'll do 80 into 900, that is 72,000 each. Being unsold inventory lying with the recipient included in the stock now. That's the end of our question number 4. I hope you understood. If in case you didn't understand the computation, you can always do this container sent to be 100, accepted being 20, neither accepted nor returned being 80 containers. Yep, and the higher selling price is 1500, selling price per container previously recorded is 1000 and cost is 900. This is only for noobs. If you can understand the entry state, you don't have to do this. In fact, you don't have to write this in the exam as well. We are done with 4 questions. Let's now quickly get into question number 5. Question number 5 on the topic of goods sent on return or approval is here. E Limited sends out its accounting machines. What do you mean by accounting machine? We'll try to find one. Accounting machine is a calculator. Want to see a calculator? This This is an accounting machine, a calculator. Okay, hi-fi name, isn't it? Pretty hi-fi name. Huh. E Limited sends out its accounting machines costing rupees 200 each. 200 rupees each is cost to their customers on sale or return basis. Very good. All such transactions are however treated like actual sales and are passed through daybook. That's pretty much like how we did the rest of the problems. Just before the end of the financial year, on 24th of March 2016, 300 such accounting machines are sent at invoice price of 280. Note this. We will write entry for this. How many units are sent? 300. At what price? 280. When is it sent? 24th of March. Come on, let us write the entry. This is in the books of E Limited. Solution to illustration number 5. I'll write 24th of March. Debtors account debit to sales account. This is 300 accounting machines into 280 each. 84,000, 84,000 being goods sent on return or approval basis. What's happening after that? Out of which 90, oh, my cursor is little invisible. 90 accounting machines are accepted by the customers at rupees 250 each. When the customers accept, we don't have to write any separate entry. Why? We already passed the sales entry optimistically when we sent, even before we receive acceptance. However, here the acceptance is received at a price of 250, which is 30 rupees lesser than the price at which we sent. So we have initially recorded the sale entry at 280. We've received the acceptance as 250. So we need to reverse. We need to reverse our sale entry to the extent of 30 rupees. Come on now. Let us reverse our sale entry to the extent of 30 rupees. So to pass sale entry, we need to do debtors account debit to sales. To reverse it, we should do sales account debit to debtors. But we will do this at the price of 30 rupees per accounting machine only for 90 machines, not for entire machines. Come on, let me do this. It is sales account debit to debtors account for 90 machines into 30 rupees, which is 280 minus 50. This is 2700, 2700. Being goods accepted at a lower price. And after this, and the rest, no report is forthcoming. We've received no information regarding the rest of it. Show journal entries. So we have sent 300 machines, out of which 90 machines have been accepted. 210 machines have been not accepted. So on the year end 31st of March 2016, we need to reverse the sales entry that we have passed for 210 machines. And we should also include such 210 machines into our inventory. But to reverse the sales entry, we need to pass it at the selling price of 280 each, at which we passed the entry before. And to include such inventory in stock, we need to do it at the cost price of 200 each. Got this? Come on, let's do it. So, sales account debit to debtors. Goods neither accepted nor returned lying with the customer. Now reverse. I'll do it for 210 machines at rupees 280 each, which would come to 58,800 and 58,800. Following this, on the year end, the next entry would be including such inventory into my stock, which is stock with customer account debit to trading account. This is 210 machines into 200 each, which is 42,000. Stock lying with customer included in inventory. And in this question, we have no information about any stock that is lying with the customer unaccepted being either accepted or returned in the next year. If they had given, we would have written an entry for the same. That said, guys, this is solution to illustration number 5. I show this solution to you. Usually people, when they watch a video on account, what to say, YouTube, usually you people, I know if it is not a live video or a premiered video, you would love to watch it at 1.5x, 1.75x or 2x speed, because you feel that the faculty is slower than your speed. You think that you learn faster than the faculty. I am here flash. I can teach it to you faster than you can learn. You might have to watch my videos at 0.75 or 0.5x speed. Just changing the trend, showing it off to you as to how fast can I be. You need to think fast. That's the only point of time where you can write fast. Because this is a common complaint from the student community that, sir, I am not able to finish 100 marks of the paper. A lot of them do write fast, but still they don't write fast in the exam because they're not able to think fast. So in this session here, I'm trying to teach you how to think fast. So you think fast, you write fast, you finish off exam fast, you become a chartered accountant fast, you start earning lakhs of rupees fast. so that you don't fast. I am also funny. This is solution to illustration number 5 on the topic of goods sent on return or approval. I hope you people understood this, and I don't want to continue 6, 7, 8, 9, 10 in the same video, so I would come out with another video part 3 wherein we'll discuss solution to question number 6, 7, 8, 9 and 10. See you in the next one. Till then, remember, life is not a battle to be struggling, it's a game to be enjoyed. Till the time you're learning something, you're having fun. It's all good. The day you guys either stop learning something or stop having fun, trust me, you might start studying. Because you might be in a battle. So thumb rule to stay happy is pretty simple. It is to stay in the game. So one last time on this day, I have just one simple question for all of you. Are we in the game? I hope your answer is yes. See you all in the next one. Till then, tata, bye bye, take care and get lost.